The broadcast is now starting. All attendees are in listen-only mode.
Okay, you guys, how everybody's doing? This is Neil Green again with you on the weekly webinar, just like every Wednesday, talking about the topics that are taking place the same day. First of all, I would like to thank you very much, everyone, for joining us. You guys on GoToWebinar and you guys on Facebook Live, welcome. Just want to do a technical check. You guys on GoToWebinar through the website, can you please, you have a chat window, so you, of course if you have any questions during the webinar, you're more than welcome to ask me. If you can please write something down on the screen, or I just want to know that you can see my screen, hear my voice. Okay, just let me know that everything's good. See, you have a chat window. Okay, just write me down that you can hear my voice, see the screen, in order for us to start. I want to welcome you guys on Facebook Live. By the way, if you want to join one of our webinars, of course it's for free for all of you. If you're a customer, if you're not our customer, if you just want to listen, I've been doing these webinars. I'm doing these webinars once a week, every Wednesday at the same time, which is what time is it now? GMT, 3 o'clock p.m. GMT time, right? This is our homepage at itrader.com. More than welcome. All you have to do is to go down here and look for the join our webinar. You see every Wednesday at 3 p.m. GMT time. You just click on save me a seat, put in your first name, last name, and email. Of course, it's for free, and then you can join us through GoToWebinar. Of course, these webinars are recorded and going to be available on YouTube and on our homepage at itrader.com on Facebook. All right? Are we good so far? Okay. Oh, sound quality is great today. As it's better than last time, you're saying, huh? Okay. Okay, that's great. So I'm pretty okay. Okay, thank you guys. Thank you. Okay, so let's start. You ready? Okay, that's good. Okay, let's start. So just a second. We have to start from the first page, right? Okay, earnings season preview, first quarter of 2017. Okay, as you probably know, we talked about it in past webinars. If you don't know, I'm gonna repeat it just for you guys. We have 4 quarters a year, right? Every 3 months is a quarter, and we have 4 earning seasons. Okay, 4 earning seasons. Once every 3 months, all the big companies that are published that have stocks in the stock market have to publish, have to send out reports, okay? And if we know how to read this report, okay, if we know how to analyze the market based on these reports, on the earning reports, we have a great shot, because I think it's the best. I mean, it's the best time to trade on stocks is during the earning season. Okay, a lot of opportunities. I'm going to show you right now what happened during the earning season, and some call it the report season, and then we're going to take it from there. All right. So major quarter one earnings reports start this week. Okay, just for you to know, it's going to be for about a month and a half. Okay. This earnings season will provide information from the month of January, February, and March. All right, right now it's April. We're going to get the reports of the first 3 months of the first quarter of 2017, which is January, February, and March. Okay, and all the great companies are going to give out reports. If we know how to read these reports, we're going to know, sorry, how to trade on it. Okay, great. Okay, the season will last for over a month and end in mid-May. All right, so we're talking about a month and a half. All right, from actually mid-May, we're talking about a month. okay, around a month, that all the big companies, all the big corporations will hand out the reports from now till mid-May, from a week from now, actually. Earnings season is considered the best time to trade stocks. Okay? Okay. Traders use the publications in order to receive solid direction. Okay? If we know how to read these reports, and I'm going to show you right now, I'm going to teach you actually during this webinar, what should we look in the reports. Okay? You can find it anywhere in Google, all the financial websites. The reports themselves, you don't need to read the whole report. It might, be 90, 100, 120 pages. We have to know what we're looking for. Let me give you an example. All right, and try to answer. You guys on GoToWebinar, you can answer on the chat window. You guys on Facebook Live, you can just write down a comment, and I'll try to answer your questions. Now, let's take an example. I don't know. Let's look for Apple. All right, a big company, big stock, worth like $700 billion. Okay, a lot of money. If I want to trade on Apple and I'm waiting for the report of Apple, okay, what do you think I should look at the report of a company like Apple? What should I look for? Okay, if I have to take out like mark headlines from the report, what do you think I'm looking for? Come on, guys, any ideas? All right, think about it. Apple, okay, Apple stock, everybody knows Apple. I want to trade on Apple. I know the date of the report. I'm seeing the report. What do I have to look at before the market is open? Okay, so let me tell you just in general. I would look, you can write it down at three major things. First thing is the P&L, profit and loss. Okay, is the company profitable? How much money did they make in the first quarter? Okay, did they make money? Did they lose? And so on and so on. And this one reflects on the EPS, which is the earning per share. Because if I know the number of shares that the company has out there, okay, in the market, and if I know the P&L, I can do the EPS because I know how much money it's per share. Okay, so P&L report, profit and loss is important. The second thing, I will look at new businesses. If we look at Apple, I want to see how many new Apple stores they have around the world. Okay, if they're standing domestic or they get developed. And the third and most important thing, I call it the key number. Now the key number changes. The key number is something that changes between publications. I won't be looking for the same thing at every company. For example, looking at Apple, I want to see how many new iPhones were sold compared to the forecast. Okay, let's say all the analysts that are analyzing Apple have decided that Apple that 100, I'm just giving out the number, 170 million new iPhones is a good number. Okay, of selling iPhones in the past quarter. Now I want to look in the report if they sold more or less than 170 million. Okay, just an example. With Apple, I would look more on these days, more on like music product, a cloud product in the past 2-3 years. This is most of their most of their profits are coming from this. So these are very important things to look on when you look at a stock, but let's go for it. So traders use the publication in order to receive solid direction. Lots of traders could be both short and long term. So we can trade for the short term and we can trade for the long term, and depends on the stock. Many times trends evolve after specific publications. The first trend that usually forms is the bank trend. Now let me explain why. The thing is that every earning season, okay, every 3 months, every time that during the earning season, first of all, we have all the financial stocks in the United States. Earning season is in the US, okay? US economy, the strongest economy in the world. Now it starts with the banks and then goes to other technology companies, and then to companies that has to do with commodities and builders and so on. So the first trend is the banks. Okay, and it kind of gives us it's kind of give us, if we know where the banks are going, okay, so we can try to guess where the whole market will go. Okay, so it's a big clue. Now, JP Morgan, Wells Fargo, and Citi will publish on Thursday, which is tomorrow. Okay, Goldman Sachs and Bank of America could react to the publication, and this is important. Now, Goldman Sachs and Bank of America, where is it? I'm sorry, and Bank of America will report on Tuesday. Okay, so we have around, like, what is it, 5 days between Thursday to Tuesday. We can see what JP Morgan, Wells Fargo, and Citi are doing. We can see the reaction of the market to their reports. And let me tell you something. Well, traders should diversify their portfolio using all major bank stocks. Of course, always diversify in order to do the right risk management. Okay? And major US banks are trading near all-time highs. And let me show you that. Let me show you what I'm talking about. So let's open the MetaTrader. Okay. This is, for example, Bank of America. This is a daily chart. Here is a weekly chart. See all-time highs? This is a weekly chart, which means that each candle you see here represents 1 week. Okay, this is the week of the beginning of November. Since the elections, interest rates started to go up. The US stock market went up. And as you can see, there is a very, very high correlation between the bank stocks. Okay, this is Bank of America. Look at Citigroup. Okay, all-time high. Looks the same. The market right now is in the best situation ever. Goldman Sachs, all-time high. Around, okay, it was a bit higher 2 weeks ago, but I'm talking in general. Okay, JP Morgan. So they all look the same. Okay, all the American banks are domestic. Okay, they don't have a lot of business out of the US usually, which means they're domestic. They work in the US, and based on that, we can see that the reaction is almost the same. Now, I want to show you something. All right. Let's go to, let me think about it. Okay, if we go here to see, let's open CNBC. I want to show you something, cnbc.com. And let's look for JP Morgan last report. Okay, and then look at Bank of America, and I want to show you the reaction. Okay, so JPM, just looking for the stock itself. JP Morgan, maybe I should just write it down to get it, to find it. Should be JPM. There you go, JP Morgan. Okay, yeah, JPM. As I thought. Okay, I go to earnings. You see, on CNBC, you can find it on Nasdaq.com. And okay, so the last report before this one was on January, the last 3 months ago, January 13th, okay, 2017. EPS was better than expected. Now, let's go back to the chart. January 13th. So we're looking at the day after, because you see the reports are published either before the market is open or after. They never interfere during market time. Okay, market time we're talking about in the US, GMT time from 2:30 till 9 o'clock in the evening, GMT time, right? 14:30 till 21:00. Okay, so let's take a look at the reaction. So we said JP Morgan. JP Morgan daily, January 30th is right here. And you see the report was not so good, and then you see the price of the stock, that we had a gap down. It started here. Okay? See this gap? Okay, this is a daily chart. Each candle represents 1 day. This is the day of the 13th. And then after market hours, we had the report, and then it opened here. Okay, the market opened lower. We had a gap down. Goldman Sachs, take a look at this. Goldman Sachs reported on, let's look for the report first, right? We don't want to guess, so we go, I think it's GS. Let's just write it down, gold. No, it won't work with two M's, huh? Okay. Goldman. GS, there you go. We have it. Go to earnings. Same thing, all right? You can do the same thing at home during the earnings season. Just look for it. Right now it's traded at $227 per share on January 18th. Okay, back to the MetaTrader. Let's take a look at the reaction. Sorry. There you go. January 18th was right here. No, it was here. You see the same reaction. We had a gap down. Okay. So if you want to see another one, group during these days, same thing. So you see, we have a very high correlation. And why is this important? Okay, why is this important? Let me try to explain you why. If we have, as I showed you on the PowerPoint, let's take a look again. If JP Morgan, Wells Fargo, and Citi will publish on Thursday, Goldman Sachs and Bank of America could react to the publications, okay? Goldman Sachs and Bank of America will report on Tuesday. Now think about it. If they're all domestic, if they're all very high correlated, all the US bank stocks, okay? For example, if interest rate goes up, what do you think? Is it good for the banks or not? Of course, it's great because they make more money. They sell money for a better percentage, right? If they sell money for a better percentage, they get more, okay? They give out loans, they make more profit, and then the stocks are going up. So it kind of works the same, right? So if Goldman Sachs, Bank of America, okay, will react, will have the same reactions as JP Morgan, Wells Fargo, and Citi, there is your cash, guys. Count it, okay? That's pretty easy. See, sometimes making money is not so hard. So you know exactly where the market is going. Now traders should diversify their portfolio using all major bank stocks. You can use the trend at the beginning, okay, of the banks. What I'm saying is not put all the eggs in one basket, never. This is the right risk management, okay? Major US banks are trading near all-time highs, I just showed you. Now, how do I read in general whether you know, let me show you in general. P/E ratio, we're going to talk about it per sector. Conservative versus volatile, if you're more of a risk lover or more of a conservative trader. We're going to talk about the stocks in the stock and index and EPS numbers and specifics and so on. Okay, let's start. You can go to Google Finance. Okay, let's go to Google Finance. Okay, do I have it here? There you go. Google Finance, and this is, for example, Goldman Sachs. Now, as you can see, if you go on Google Finance to whatever stock, you just have to write down the symbol. You will receive all these numbers. Now, I'm going to teach you right now how to read these numbers in order for you to make your, you know, and you want to build a portfolio to make your trades easier. It's going to make it easier on you if you know, if you're more of a risk lover. You're going to look for volatility, which means you can make big profits, but you risk more. Of course, you can always use a stop loss, as you probably know, and you decide how much money you're willing to risk at each trade. But if you're more of a conservative, you're going to look for a lower P/E ratio, and let me explain. What you see here, you see $227 in this case, okay? This is the price per stock. Okay, right now Goldman Sachs is traded at $227. As you can see, it changes all the time because right now the US market is open for almost an hour. Okay, this is the range of price low and high the latest this day when the day began, 52 weeks and so on. Now the open price, okay, volume, how much money. What we want to look at is this. You see the market cap? Market capitalization is the total value of a company in the stock market. It is generally calculated by multiplying the shares outstanding by the current share price, which means the market cap means that Goldman Sachs right now, okay, worth, okay, if they sell all the, buy all the stocks, okay, what they worth is around $20 billion, a bit more than I'm sorry, 90. bit more, why did I say 20? I don't know. A bit more than $90 billion. Okay, this is their market. This is what they're worth. Okay, now the number of shares, Goldman Sachs has the number of shares held by investors and company insiders and so on and so on. The shares in the market is almost 400 million shares. See that? 398 million shares, right? Okay. Now, if I take the number of shares multiplied by the price per share, I'm going to get how much money Goldman Sachs worth. Okay? Which is a bit more than 90 billion. Great. Now, the EPS is the earning per share. Okay? The net income over the last 4 quarters, it's yearly. What you see here is for 4 quarters, annually, per year. Okay? The net income over the last 4 quarters divided by the shares outstanding. Okay? So if I take how much money Goldman Sachs made this year, and I'll divide it to the number of shares, to 400, almost 400 million, I'm going to get $16 per share. So if I hold 1 share of Goldman Sachs, okay, and the board have decided to, give out what we call, out of the profits, dividend and so on, I'm going to get a bit more than $16 per share. Okay, let's try to calculate how much money they made this year. So, I have a calculator. Let's open up a calculator. This is a calculator, right? Okay. See, let's try to see. Right now, the price of the stock is $227 per stock. We have 398 million shares, a bit more. So it's not going to be accurate, but okay. So we're talking about a bit more than $90 billion. A bit more than $90 billion. This is the market cap. This is what they're worth. Okay? Great. Okay? I'm trying to make you professional here, guys. Okay. So if I want to know how much money Goldman Sachs made this year, follow the last 4 reports. Each one is a quarter. 4 quarters is a whole year. I can do this. I can say, okay, so they made $36 per share, and they have 390 million shares, right? So we're talking about, what is it, $65 billion, okay? So you can calculate everything. But what I want you to look at, the most important thing, is the PE ratio down here. Now, the PE ratio is the share price divided by the earning per share. And what do we get? If I take the share price, around $227, and divide it by the EPS, by the 16.36, I will get, you see, 13.9, the PE ratio. Now, the PE ratio, why is it important? The PE ratio actually tells me how many years, okay, how many years will it take the company, or will it take Goldman Sachs in this case, to earn its worth, its capitalization back, which means following the last 4 quarters, it's going to take Goldman Sachs almost 14 years, you see 14, 13.9, 14 years to make $90 billion. Okay? Now you ask me, how is this important for us as traders? I'm going to tell you. If I'm a risk lover, if I want to try to make a lot of money during this earnings season, but I don't mind to risk a lot, okay? I will look for a higher PE ratio. Higher PE ratio means higher volatility, okay? In percentage, in dollars, in whatever. Higher volatility, which means the market can go up like crazy or down like crazy, and it might affect my portfolio strongly, okay? It might be a good effect or a bad effect. It depends if I went with the market. So a high, if I'm more of a conservative trader, I'm going to look for a low PE ratio. Okay? You got it, guys? Okay. So this is Goldman Sachs. Let's take a look at, we said JP Morgan. Let's try to see JP Morgan. Same numbers, $85 per stock, Market cap $305 billion, worth more than Goldman Sachs, like 3 times more. Okay. DPS, almost the same. If you have a stock, you get like $6. They have much more shares. Okay. But the P ratio is 14. You see, P ratio is 14. Let's take Bank of America. BOA, I think it's Bank of Northeast Asia in this case. I look for bank. Let's just write it down. Bank of BAC here. Okay. P ratio, almost the same. You see, 15 years. We don't see 70, 60, 100, 2. Okay, 15 years. Okay. See, they're all the same. Let's take a look at whatever, Citigroup. Okay. Citigroup, we're talking about a P ratio of 12 point something. So, okay, so you can see that they're all similar. Okay, very high correlated. Great. So if we know what's going to happen on Thursday, it might give me a great opportunity. On Thursday, it's going to give me a great opportunity for Tuesday. P ratio per sector, we talked about it. Conservative versus volatile. I just told you stock and the index. Okay, before I take any trade, okay, I can take a look on the index. If I want to trade on, let's try to make it faster. If I want to look at, I want to trade on Goldman Sachs, and I see that it's been traded on NASDAQ. You see, on NASDAQ. So I can go to NASDAQ before the market is open, look at the index, at the futures here, put a daily, and then see if the market the same day goes up or down. If the candle of the same day is green or red, and it might tell me a lot on where the stock might go. Okay, this is another thing I want you to look at. And EPS number and specifics, of course, we want to look at the EPS itself, if they're making money or not. Traders should prepare their trading setups per stock, support and resistance levels before publication, all right? This is knowing how to combine technical analysis with the fundamental, put some support and resistance levels to understand how high or how low the price might get. If it's daily, okay, if you want to trade, take a short-term trade, look at the same day. If you want to take it for a longer term and go with the publication of the reports, I would take it for a week or 2 weeks, so you can take a look at a weekly chart. Market sentiment is considered look, VIX, the index of fear, trading close to critical level of 16. VIX above 16 reflects volatile market. Okay, just to show you, this is the VIX down here. Okay, right now traded at 16. If it's going to be more than 16, pretty volatile. Okay, if you're more of a risk lover, you want to make high profits, that's for you guys. And of course, good luck. Okay, of course, there's much more to learn, and you can always contact your account managers, to get all the information. I'm just trying to give you the basics to understand how to fundamentally look at the earnings season. And this earnings season is going to provide you a lot of opportunities, since every day we have other companies publishing, hand out the reports. Okay, any question, guys? This is the time. Any questions, anything you would like me to clarify? I'm here for you. Any questions? So we good? Would you like me to repeat anything, or oh, is it that easy? Okay. Okay, guys. So thank you very much for participating. I'm going to be here next week. Okay, you're more than welcome to join our webinar. Of course, it's going to be on itrader.com on Facebook and on YouTube, recorded, just like every webinar. I'm going to be here next Wednesday at 3 p.m. GMT time, just like every week, talking about the next. What do we have next week? That's a good question, you see. What do we have next week? I'm not even sure. This is for next week. Okay, I guess it's not updated yet, but from tomorrow, I think you can see it. Okay. Okay, guys, so thank you very much for being here. Hopefully, I'm going to see you on next webinars, and have a great one. Okay, take smart trades. Guys, use this earning season. You have a month. Okay, a lot of opportunities. Follow the publication. Start with the banks. Okay, and okay. I have a question here. Do you mind repeating some of the beginning? Okay, it was a long one. Well, can you be more specific? Can you be more specific? You can just go to Facebook. Go to Facebook. You have Facebook account. Okay, click itrader.com, type itrader.com, and you can just listen to the webinar from the beginning. Okay, you have it on Facebook, itrader.com. You don't have Facebook? Well, maybe it's time to open an account. Or on YouTube. Tomorrow it's going to be on YouTube. All right, just look for earnings season itrader.com. Thank you, guys. Have a great one. All right.